What is up, everybody? I appreciate you all joining me today. I'm excited because I'm actually not reading off a screen or a teleprompter today. I'm going to give it some free flow style. So, first, I wanted to tell everybody, and I don't care what it sounds like, we have a new format coming out. There's going to be a slide later. I'm going to show you. We're going to break down the format. So, anybody, because I asked a question yesterday and I asked people to vote on this, and I said, what would you rather have? Would you rather have market direction where I come on every day and I just nail the market direction for you and you make your own trades? Or would you rather have strategy and be taught how to enter into positions and exit out of positions so that anybody can do it, whether you're trading 100 or 200 or whatever you're trading, whether you have real jobs or you're taking care of your parents or you're taking care of your children? It doesn't matter. I teach you to trade. I teach you to enter in, choosing an entry point and exiting out with strategy. So if you have like $150, you're only looking to make $30 on a trade and you get the hell out. So anybody that hasn't heard me for the past 4 or 5 days, anybody on my platform, listen up really good. You must use a cash account. If you're using Robinhood, you can call them and tell them you want a cash account. It gives you unlimited day trades. So I mean, that's the most important thing, and I'm going to skip right into it because you must day trade. Every stock that I've spoke about, I was in and out this morning, okay? I gave out a stock, what was it? PXD, right? It finished the day above 140, but I gave out PXD. It was 130 and 30 cents. It spiked to 140 and like 19 cents. I sold my options. I took profit, 28% there. Boom, put it in my pocket. Wait, you have a cash account. You can do whatever you want. So all these trades, TDOC, I made like 70% when it dipped this morning and I sold at a peak, right? So if you have to hold the trade, right? Say you get a great entry today and you hold the trade and that shit goes up. And I'll mention Edit yesterday. Edit, I got into, I wrote it up. I made like 140%. And then I got back into it on the way down and I lost money on that trade because I sold at a loss this morning. But the point is, if I had to ride that shit up and ride it down, I would be like bipolar. I would be so excited at like 12:30, and then by 4 o'clock, I'd be like this to everybody. I'd be like, hey, doorman, F you. Hey, food guy, F you. So the point is, we don't want to do that. You don't want to trade with emotion. So I'm going to stop everybody right there and tell you, cash account. And you hear people say this, cash account. You don't want to trade on margin. If you don't know if you have a cash account, you call up Webull, you call up E-Trade, you call up Robinhood. It's worth it. You want a cash account so you can enter into and out of a position, okay? First, let's get to China, okay? Let's go with some world news. China's throwing up on itself. Chinese stocks suck. They just keep getting worse and worse. I mentioned I swung Tiger yesterday and that I'd be playing with Tiger a bunch going forward. I should have took Tiger on the way down today. I think it dropped like 12%. So as easy as we can ride it up and make 100 or 200% today, we could have done the opposite with $15 puts today. So again, my mind is just all over the place. I have so many things going on when I trade different accounts because I work on like 10 different accounts. I took an 11th account from my brother's nephew. From my brother's kid, my nephew. All right, so I spoke about cash accounts. I'm going to tell you guys, when it's in a tough market like it is today, like it is yesterday, you want to find stocks or option positions that will hold water, that won't go down when the market throws up on itself. So how do you find these kind of stocks? Well, I'm glad that I asked myself that because that's the main point of today's lesson. In this market right now, I'm looking for stocks that have huge institutional ownership, okay? So when you look up a stock, let's say you go to Webull, you can check up the company profile, and there's a point there where you can click on it, and it tells you what the breakup is. Meaning, if the institutions own 82%, the insiders hold 3%, and the retail traders hold 15%. Other investment groups are like holding companies that will hold a share of it. When holding companies are holding your stock, it's pretty much locked up. When your stock is locked up, there's less supply on the market. So I'm talking about in a turmoil market like today, if you're in a good stock, like let's say you're an upstart, right? Which went from 125 all the way to 200, all the way to 220. It rescinded today. I think it's probably like 188, 193, something like that. Institutions are buying and holding. Retail traders were selling today. So when you look at the amount of shares that are out on the market, and I think they did a private offering or convertible notes or something to that extent, it got eaten up by the institutions. The institutions own probably like 80, 90% of this stock. I'll have to check that out. And maybe we'll do that when we start talking about stocks. Okay, so here's what else happened in the market. And I'm glad I waited for a few other people to join on. The S&P had the most trading volume in a long, long time. So let's look at what happened to the S&P today, okay? it looked bullish, and then it sold off at what, like 2:30, or yeah, like 2:30 on the dot. It sold off really hard, and then I think it might have even sold off again at 3 o'clock. So they were trying, and when I say they, I mean the institutions, the banks, the hedge funds. They were trying to tank the market. They were saying, okay, screw you, retail traders. But the retail traders and the other people who are markets and bullish strong on the market bought that shit up, and it went back up. We did see the UVXY spiking, so why else is that important? Well, I just dropped my paper, so let me just grab that real quick. Oh, there we go. I'm back. So anyway, the S&P had the most trading volume in, I don't know if it was record volume for the entire year or just in like the last 3 months. I did not look that up, but I did see it traded at record volume. What else? UVXY traded at record volume today. Now, why is that important? Because the UVXY had a lot of action on the dark pool. So the dark pool is like buying something off market. Like you're going to buy a house, and instead of being listed with MLS, which is the listing guide, you buy it off market. Nobody knows about it. It's not officially listed. So this off market, or these dark pool transactions, they were buying shares upon shares of the UVXY. Now, why is that a good thing for my one position that I'm carrying forward till tomorrow? One position? What the hell are you talking about, Matt? Yes, I'm only carrying one position forward. I haven't looked at my phone after hours because I don't give a shit about after hours. I say the markets calm down tomorrow. I say the worst we saw was the past 2 days. And with a calm market tomorrow, the UVXY will go down. So that's the one position I'm carrying forward. You guys waited for it. I'm going to continue on with a lesson, some other shit. But this is pretty important because gauging the market, it's important. And I'll talk about the SPY real quick. Again, the SPY went up, then it sold off, then it went up, then it sold off majorly. So if you can't day trade the SPY, you have so many emotions. You're like riding it up, riding it down, riding it up, riding it down. The point is, even if you were bullish or bearish, watch, bullish, boom, ride it up, bearish, ride it down, bullish, ride it up. You get what I'm saying? You don't have to call and pick every one. You could be like, I'm bullish. So you ride it up, you sell it at the top, you wait for it to drop. Okay, it dropped. You could be bullish again with calls. You don't have to enter into every play. You don't have to go, I'm bullish now, one call, sell it. Okay, now I'm bearish, one put. Okay, sell it. You don't have to be right like that because you can frustrate yourself and make yourself crazy. Another important thing, at 2:30 to 2:40 today, at 2:30, I made a video for my platform members, and I said the market's going to finish strong, and I'm pretty positive about it, and my tracker's telling me so. Then the market threw up on itself, so I did a new video, and I was like, I could be wrong, but now the market looks like shit. Everybody save yourselves, and kind of, I wasn't that intense. But the point was, and then I went out and deleted the videos, and I said, I've got no clue which way the market's going, up or down, but I'm going into SPY calls, and I made a quick 80%, and then I sold them, and then I thought for a while, I entered into SPY calls again, and then I sold them, and then I went into the UVXY puts. So the point is, if you can day trade, you can do this shit, all right? The point is, you can enter into any of those trades. You could do the morning trade, you could do the noon trade, you could do the 2 p.m. trade, the 3 p.m. trade. It doesn't matter. You have a job, that's great. You only have to do one trade. Gauge the market from 2 to 4 p.m. If you're correct, you're going to be a winner. Gauge the market from 9 a.m. pre-market. Listen to the shit that's going on. Select a good entry, plan ahead, secure profit, and you're out by 10:30, and you can move on with your day. That's what it's all about. Okay, so I'm going to show you guys some quick slides just to let you know, in these crazy volatile markets, on days like today, and I don't know what the advancers did or the decliners did. I'm assuming decliners beat advancers probably 2-1. On crazy days like this, I crush the market. I crush it because the way I trade, when it's volatile, when it gives you the head and shoulders, which basically means it shows you lows, it shows you highs, it shows you lows, but it does it multiple times a day. It's telling you, the market's telling you, hey, I'm at a low, buy me, buy me. Great, it spikes. You don't hold the bag and say, oh, well, maybe this time it's actually going to spike higher, because it doesn't. It shows you it's doing this or it's doing an M. So when you buy at the bottom, you sell at the top, you buy at the bottom, you sell at the top, or vice versa if you're playing with puts. The point is, every time it gets to the top or the plateau, you don't get greedy and say, yeah, maybe this is the one time today it breaks out and I crush it with a 400% return, because that shit's not happening in this market. If you haven't figured it out, this market that we're in right now, you have to be extremely quick. So it makes me happy, because my strategy and the way I tell you guys, and I've been telling you guys for months now, to plan ahead works for you. I don't care if you're entering one position. As we mentioned, Romeo took his account from 100 up to like 18,000 now. I mean, that shit is sick. Point is, you have $100, great. You enter in for a $100 contract that's currently selling at 150. You say to yourself, if it goes down to $1, I'm gonna buy it. I like the stock. If it doesn't go down, guess what? You didn't lose your $100. If it goes down to $1, you're basically getting a sale. Anything that was 150, you're now buying for 100. And then you say to yourself, okay, I'm in for $100. 38% sounds good. I'm going to sell that one contract that I bought for $100 for 138. Boom, you just made 38%. You do the same thing the next day. Okay, I bought it for 125 and I sell it for 175. Boom, I just made another 35%. When you look at it after 3 days, your account is going to double. Now it's at 200. Then it's at 400. You're 1 week in, you went from 100 to 400 or from 1,000 to 4,000. Yes, I shaved. I see someone making a comment. All right, let's get to some slides, please. All right, so this is how the platform is going to be laid out from now on. I'm going to talk to Carlos this weekend. We're going to have my updates, which will have my videos in it. Then I'm going to have lessons. When I teach you about how you're looking for stocks with institutional, percentage, 80, 90%, I'm going to put that onto the lessons. So if you log on to the platform, you're like, okay, I want to catch up on some lessons. You can go through 5 or 6 lessons like that. If you're just looking for the market update and you log on at 1 p.m., great. You could see the video at 12:30, and then you can see, like, let me go back to the pre-market video. What did he say? Okay, well, that's true, and that's true. So I guess the end of the day must be true. Okay, you can use things to understand and diagnose the market. Then I'm going to come up with a trade of the day because people really want alerts. And when I come on here and I tell you guys, yeah, I'm killing it again. And yes, I had an off day yesterday, which broke my streak of 22 straight winning days. But I had today to start a new streak. The point is, if I give you a winning trade when we have it, I'm going to be like, hey, the stock's $140. If it goes down $1.50, I'm going to pay this much for the one call that I'm going to buy or the 2 calls. That way you can watch, you can plan ahead. If I put in for $1.60 in the option and it drops from $2.40 to $1.60, you know I bought that shit. If you put in for $1.50, you just saved 8% over me. The point is, I'm also going to put in, when I pay $1.50 for this option, I'm going to turn around and sell it for $1.95. There you go. There's 30% right there. So even if you're busy and you just want to look at Matt's trade of the day when we have that live on Monday, that's what we could do going forward. We'll have all of the postings, and then we're going to have a subcategory for Romeo and Love if they want. Basically, I want to make it easier for you guys to navigate. So I hope you understand that, because I don't understand what everybody wants. I gave you guys 3 options yesterday, and so many people said 1, then people said 2, then people said 3. I don't care if everybody said, I only want alerts. Just give me alerts. That's what I do. If somebody said, I only want market direction, I'd be like, great, I'll only give you market direction. I'll update you guys every hour on the hour. But there's so much to encompass. All right, let's get another slide up there, please. Now, this I love. Somebody wrote me this. I had my best day in weeks today. Having unlimited trades made things so much easier. You ran out of cash because it's all locked up until tomorrow. So yes, when you have a cash account, it takes 1 day to settle. But I wanted everybody to know, when the market's crazy volatile like it is, if you have a cash account, you could enter into as many trades as you have cash for. So you enter into a trade, it's 500, great, it's used up. You've got another $300 trade, you sell it, it's used up. Whatever you have, you can go through $1,000, $2,000 a day. It doesn't mean you're $2,000 in the market. It means you're in, you're out, and you secured profit. Let's get another slide. Same dude made another comment. Yes, like I said yesterday, I love it when the market is turbulent as F. The market is grass, and I am the lawnmower. So these are positions he made. 80% on TDOC options. Got in today. 260% on Microsoft options. And I know everybody, if you don't understand investing all that much, you understand what returns are. If you put in $1,000 and you make 80%, you make $800. If you put in $1,000 on Microsoft and you make 260%, you make $2,600, okay? If you put in $1,000 on the UVXY puts and you make 40%, you're making $400. So when I say you don't need a lot of money to invest in options, you just need to be smart. You just need to understand the strategy, and the strategy is entry point. Okay, let's get one more slide up there. By the way, I'm not a financial. Okay, this is yesterday. I had edit, right? I took edit and I was watching, and it went all the way up to 550. I paid $200 per contract. It went up to 550. I had 9 contracts. If I did not have a day trade, this closed the day at $1.83. I sold it $4.75. It went all the way to $5.50. I sold it $4.75. So I made $2.75 per contract, and then I took a loss on my next trade of like I sold at $1.60 this morning, so I was in for $3.20. I lost $1,600 on that trade. I made what, 20 something hundred on this trade. Net profit. That's what I want you guys to do. Every trade's not going to be the best one in the world, but if you make a net gain out of every position that you're in, you're going to make money. All right, let's get another slide. All right, stock ownership. Yeah, so this is the point of the lesson for today. All right, stocks with large institutional ownership, even in tough markets. And I mentioned TDOC, and I'll give you for example. TDOC, when it opened on Tuesday and the markets got rocked, it opened at $134. It went up to $139. Then on Wednesday, yesterday, the market still got rocked a little, and it opened at went down to $135. And then again, it went up to like $139, even I think $140 yesterday, okay? So what do you expect? The same shit today. The market opened, TDOC dropped. I bought in. That other dude bought in. When TDOC spiked, we sold. You don't need to hold forever. But if you find stocks with large institutional ownerships, they will dip. And when they dip, that's your time to strike. Let's get another slide. And I think we might be. All right, last one. Okay, so everybody read this one real quick. This is a lifetime member that I spoke to yesterday. He told me he's in the stock AI. So we were talking on the phone, and AI was like $45.50 yesterday. And I told him, how many shares do you have? He said he had 100 shares. Now, this is episode 14 of Ask Matt right here, okay? This is the example. So he had 100 shares. He was down $13 on the stock. So I said to him, if you sell the 100 shares at $46, you're planning ahead. So you'll pull $4,600 out. You're still down $1,300. So we have to make up the $1,300 for you. So I want you to buy the January calls in or at the money. So we spoke about specific calls. I told him to pay $750 per contract and to buy 7 contracts, which would put him at $4,500 investing. So he's basically investing the same way he has an extra $100 on the side. Maybe he'll take his wife out to dinner. But with his 7 contracts, at some point between now and January, if AI, which I believe is at $44 or $45 now, if it goes to $55, this dude's going to go in from losing $1,300 to being $2,500 profitable. If AI goes to $60, which is up 15 points, and I think AI is going to double by January. So I'm giving him strategy. But the point is, you know what he did this morning? I asked him, dude, you execute. AI took a dump on itself this morning. He said to me, no. I put in for $7 instead of $7.50. I'm like, we spoke about $7.50. It would have executed. And I got really excited about it. But again, he tried to save extra money. I couldn't fault the guy for trying to save extra money. If he tries to get in for $7 tomorrow, he's probably going to get in for $7 tomorrow. If it doesn't happen tomorrow, it'll happen on Monday. If it doesn't happen Monday, it'll happen on Tuesday. So you have to zoom out. Don't have FOMO. When you want to buy something, please, everybody, don't have FOMO. So just to summarize again for today, the most important things. Number 1, cash account. Number 2, planning ahead. You find the stocks that have demand, that have institutional ownership, and then demand. So institutional ownership, you go under the company profile and you can see institutions own 80%, 88%, 90%. And then you can go to the 1 month and you could be like, okay, 4 out of the last 6 days, there was inflow. There were more people buying the stock than selling the stock. So assuming a flat or calm market, I think this stock will pop. Do you guys understand that? Now, if you find the opposite and you can't find institutional ownership, like it's mostly retail traders and some insiders or something like that, and the market takes a shit on itself like it did the past 2 days, guess what happened to those stocks? Those stocks are probably down like 15% over the past 2 days. I mean, that's what the difference is between finding a stock that has demand, a stock that has institutional ownership, versus a stock that's just retail trader friendly. Oh, it's like $9. Oh, I like this cheap stock. Oh, it's an energy stock. It's got a pop. Oh, infrastructure play, blah, blah, blah. I heard my friend talking about it. That is the worst way to invest. You guys have to do your due diligence. And even if it just means looking at the chart, you look at the 5-day chart and you make sure your stock's up in the past 5 days. I don't care if it's up 1%, 0.1%. As long as you're moving in the right direction, it's showing you the momentum, okay? All right, let's get some questions today. Yeah, again, for anybody that missed it, I'm heading into tomorrow with 1 position. I haven't looked at it after hours because, again, I don't really care about after hours. So I'm assuming futures are going to be green. I want to talk about the SPY real quick before I get into questions. So the SPY today, I was ending the day. I was bullish on the SPY, and I said, you know what? Is there more chance the SPY runs tomorrow? And then I said, you know what? If the SPY runs really hard tomorrow, the UVXY could go down by like 10 or 14%. And then I was thinking to myself, I saw this one dude's return. He bought out of the money puts that ended up being nicely in the money. So I said to myself, okay, if the UVXY goes down 14%, it's at $28. That would be like $4.20. If it goes down $4, that would be $24 range. So maybe I'll take some puts. And I wanted to buy the $26 puts. And then I looked and I think they were too expensive for me. And I was like, you know what, Matt, stick to what you know, in or at the money. So that's what I did. All right, Johnny, can we get some questions up here and see if I can help some people? All right, Matt, what was my target price for Macy's? So originally, oh God, I'm such a sucker. Originally, I liked Macy's. The market, the Dow was throwing up on itself. And this was probably within the past month. Macy's was $16.10, and it went down to $16. And I said, I'm in at $16, and I gave the alert out. And then it dropped another 10 cents. And that mattered at the time because it was only $16 and it didn't move very much. So it dropped to $15.90 and people got in. Then it went up to 17. Then it retracted to $16.50. And I said, you know what? What happens if the Dow takes a shit on itself and retail throws up on itself? I don't need to be in this position. And I have followers. I have a platform, and I don't want them to be in Macy's if there's a chance that it goes down. And I understand the entire market is a chance. So Macy's came out with earning, and it went, I don't even know where it closed at today. I saw it at $21 at some point. So let me just pull up Macy's real quick. $21.61. Okay, and it went as high as $22.19 on Macy's. Do you remember my exit point on Macy's? It was $22.50. I probably would have sold today at $22 flat. I mean, if you're in at $16, it goes to $22. So you're making $6. You're making 38% on a stock within 1 month. That is what you call a spike. So I would definitely secure profit if you're in Macy's. And if you stuck it out, good job, bro. All right, let's get another question up there, please. All right, Cat is back at 204. Is it a buy or should we wait? Okay, I don't have to look at Cat because I can tell you right now. There are two other stocks that I would prefer to Caterpillar that are material plays, all right? One of them is CCI, okay? The other one is, what was the other one? Let me look at Caterpillar for you real quick while I think of the other one. But there were two other plays that I decided that if I was going to get back into Caterpillar, I'd rather be in a different stock with maybe a better valuation or more demand. Because I'll tell you right now, Caterpillar, as much demand as it has, and it went from 204 to 224, it's had the negative impact, and it's literally been in 5 days. So it probably went from 224 to 204 in 5 days. And I know a bunch of my lifers were in puts, and somebody asked me about that, and I'm like, thank goodness. I hope you have puts. And she did. So that was great. I would stay away from Caterpillar. If you wanted a materials play stock, I would look at CCI. It's definitely an institution favorite. So I just mentioned that before. It's Crown Castle. Let me just pull up the company profile right now. And the institutions own 95.06% of CCI. And it was up close to 2% today. So there you go. The rules in effect right there. There are other materials stocks that I might take a look at. Oh, here we go. This one, PXD, is Pioneer National Resources. So it closed at $140.47. Now, here's the great thing about this, and I'll show you a slide, unfortunately, tomorrow. But I gave out an alert at 138.30. It went up to 140. I sold. And then you know what it did when the market took a shit on itself at 2 or 3 o'clock today? Let me just pull it up. Because it dipped all the way to 137.54. So when I was touting it 80 cents higher, 138.30 is a good price. When it goes to 137.50, if I like it 80 cents better, when it goes down, you should be like, dude was talking about this morning. What stock was that? PXD. It's on my watch list. It was up. Now it's down 5%. Shoot, let me go into it. And where did it finish the day? Because it's a strong Dow stock. It finished the day at 140.47. So it finished at over $2 higher from when I gave the alert out. And when I say alert, we're not doing alerts with spreadsheets. So I don't want people to get thrown off. If there is something, I'll create a spreadsheet. But I want to share as much as possible with you. And again, we'll have my trade of the day. So let me just look at institutional ownership for PXD. Okay, because I mentioned another materials play. Institutional ownership, 91.44%. Insiders, less than 1%. And others are us, retail traders, 7.74%. So when people want to get into material plays, they're not going to go into Caterpillar. They're going to go into CCI. They're going to go into PXD because that's where the smart money is. All right, let me get another question. So yeah, I wouldn't be in Caterpillar. Again, Ed, I just gave the talk. I would get out of Caterpillar calls when you're not into them yet. I appreciate the 349. Don't think I didn't catch that. But again, I like PXD, but I like PXD. If you're on the platform, if you saw it today when I gave it out and then it dipped to 137.50, even if you got in at 138 and we're at 140.47 now, that's $2.50 higher. And we're looking for entry point. So that's when I would keep on your radar. And CCI, I would keep on your radar. I think it's like, what, 196 now? It was 192 early in the week, and I tried to buy it when it was 190, and my order did not execute. So I always, yeah. I mean, if you see this, can you see that dip? You see that dip? That's when I tried to buy it the other day. That was 819. Well, it was yesterday, right? I mean, that's so crazy. That would have been a crazy return. It went up to $198 today, and yesterday it was $191. God, I must have missed that. It must have happened at open. All right, BA calls. Let me look at that first. Again, BA is going to surround the airline industry. Now, here's the thing about any of the airline stocks, and here's Matt's take on the airline industry, okay? There will be a 3-day spell where the airlines go up 5%, 8%, and then 7% the next day. It'll happen before January. Those are givens, but I cannot tell you if it's going to happen in August, if it's going to happen in September or October or November. It's going to happen when the Delta variant starts getting beat down. All right, because people are traveling more. But once the Delta variant goes down a little more, retail, cruise ships, airlines, they're all going to spike. So let me look at Boeing right now. I mean, the chart looks like shit. I wouldn't even tell you to, I would tell you to stay away. Even with the SPY at an all-time high, for the last 5 days, Boeing's been going down. Now it's 212. So where could Boeing drop to if it goes down even lower? It could drop to $195. So yeah, I wouldn't be playing around with Boeing. If it got very attractive, 195, 197, 194, then I would be taking a starter position, and I would at least go out 6 weeks with Boeing. I would pay the money. I would get in or at the money. So if this shit goes down to 197, I'd be buying the $200 calls that expire in like October. By that time, the stock will probably be up to 260. All right. So that's my thought process with Boeing. You have to give yourself enough time. Airlines, if you went out to like June of next year, then yes, you're so super safe. Airlines are going to spike at some point. So if you give yourself like 7, 8, 9 months, you're golden. Let's get another question up there, please. These are good questions. You've learned a lot with Mr. Matt. Well, that's good, but that's not a question. What was the trade of the day, Matty? Well, until we have it set up today, there was no official trade of the day. But since you asked, I'm just going to pull up the platform real quick because I'm going to show you guys how easy it is to navigate, okay? So let's go to mine. First of all, the last post was about how crazy the market was, and I told people to join me today. So 10% is not bad. Then I told you guys cash account. Then I said PXD, which is the stock I spoke about. Then at 220 and 238, I told you guys I was long on the SPY, and I made 86% on that trade. Before that, I gave you guys a lesson tracker about Roku, meaning I was watching Roku today at 81.50, and depending on Roku was doing, I said if it goes down, the market's going down. If it goes up, the market's going up. Now, this is how crazy it was because Roku looked good. It was 81.80, then it went to 81.30 and took a shit on itself. Then it went to 81.50, and I'm like, that's not helping me. It was 81.50 before. What the hell did I do? So wait till Monday for the trade of the day, but I'm still crushing it, and you guys are going to crush it. I'm going to tell you entry and exit and secure 25%, secure 30%, whatever it is. I don't care if people are playing with $30,000 or $300. If I'm telling you you're going to make 25% and you're in for $300, you're going to make $70 and you're done. $70. Hey, let's wait for tomorrow. And the best trades come later in the day. I find I can make the best trades between 2:30 and 4 o'clock, and I don't even have to worry about the morning. So anybody that has morning issues, don't worry about it. Let's get another question up there, please. Sometimes I go on for a while. Hey, Matt, TTD needed gap fill. Did you miss that? Because after earnings, it shot up, and today it came down to the gap. So interesting, Joe John. I see that you mentioned that, and I have heard other people mention gap fill. But understand this, okay? The markets took a shit on themselves for the entire week, basically, right? We lost 500 points. We lost 300 points. We lost 100 points. Now, if the markets were flat, TTD would be at $85. If the markets were bullish and we had an all-time high week like we did last week or the week before or whatever, TTD would be at $90. So it's not a gap fill. It moved up because there's demand, okay? A gap fill was when you were trading with a light volume stock and it goes from like $4 to $6 because all of a sudden the bid and ask went up the next morning because the stock had news. TTD, No real news. In fact, it had earnings and it went down on earnings and then it filled up from there. So there's no gap fill on that one. It was a bad market. So you could say that about any stocks. I don't care if you're in Amazon or whatever stocks. Facebook went down. Apple went down. As of this morning, Apple was 144. If you got in at 144, it's 147 now. Good job. That's what I call buying a dip and riding it out and taking profit. TTD, I can't help it. Market direction. My small account got crushed. I'll have to start again, which is why you don't put all your eggs in one basket. Let's get another one up there, please. Hey, Matt, John Deere reports tomorrow and usually goes up. Thoughts? I don't know. Did they sell bacon? Hey, I got you. I bet you smiled. Probably the only person smiling here is the guy who loves bacon. All right, so let's see. John Deere. And, John Deere is a solid company. It's a solid mid. Oh, my God. But look at this chart. I mean, I get that it's following with Caterpillar. And, I mean, it almost looks like Dental Caterpillar. It went to 385. Caterpillar went to 224. And then it lost 30 points. And Caterpillar lost 20 points. So they both basically lost what? In the past 5 days? 6 or 7%. It went down 26 points. It does look like it turned around today because that's what's going to go on. Oh, my God. John Deere to acquire Deere Hitachi joint. I don't know. Maybe if they announce earnings and they crush earnings, but they're buying some other factory or they're doing an expenditure, which usually happens when a company announces earnings. If they have any other major announcements, they'll be like, hey, we're spending $4 million on this or that. Sometimes the market doesn't react good to that, so I'll be happy to see what goes on. Now, I haven't said it yet today, and of course, I'm going to ask you guys, please, everything we do is organic. So if you like this video, if you got information and your friend trades a marginal account, send him this video. Be like, dude, you need to use a cash account, all right? You can subscribe to this channel right there, and you hit the bell for the notifications. Other than that, you guys are great. I'm not a financial advisor, but I do come on to help you guys understand the purpose of the platform is to make you a more efficient trader. The purpose of me going on here is like an after school special to give you highlights on things that I can't include in a 2 or 4 minute video, or you're busy during the day. So you watch this shit at night. It's something to help with your education, to make you a better trader. So I've got tons of these videos. This is probably like episode 80 or some shit like that. I appreciate you guys. And thank you for coming tonight, this afternoon.